What's going on, guys? Welcome back to my channel. My name is Nick and I talk all about trading Forex and stocks, and today we are talking about a very interesting strategy, basically the trend line breakout strategy and how to trade it like a champ. Now, when we're talking about markets, there is a lot to any sort of trading strategy. There is, entries and exits and risk management and all that sort of thing. So I'm not going to be able to get into every little piece, but I'm going to give you guys the main components to this sort of technical strategy or technical approach to the market. And it is a pretty popular approach, and for good reason. So what we are looking for, before we get into a bunch of examples, the basic idea that we are looking for is we are looking for a trend that is, either moving down or up to see some sort of break and reversal. And we're trying to spot early on how we can get involved with the new trend or the reversal of a trend to the downside. On the flip side, when we are looking at an upwards market, something like this, we see higher lows, higher highs. All of this is good strength, and we're saying, okay, we don't want to be selling into this yet. However, when we start to see the break, we start to see the shift, we are looking to get involved with this trend as early as possible. And the cool thing about trend line breakout strategies or approaches to using trend line breaks is that you can sometimes catch the earliest form or the earliest signs of a strong new trend before it really gets going. And I'm going to show you guys an example of one that we talked about on stream a few months back on USD/JPY, and then we're going to look at some other examples. Now, this is something, before I go into an example, this is something that you can use on the 1-day chart. This is something you can use the 4-hour chart, the 1-hour chart. You can use it on the 15-minute chart. All of these concepts, or the concepts that I'm going to show you guys today, are not something that is only applicable to one time frame. This is for those of you guys who are scalpers, day traders, swing traders, whatever you do. I think that this concept is something that you should at least go test and see for yourself if you can find some efficacy to it, if you will. So that out of the way, the basic idea with a trend breakout or trend line breakout strategy is we are looking for a shift or a change in the status quo. Check this out. It's pretty clear even to the newer traders that this is sort of a downtrend. One of the most common characteristics of a downtrend is lower highs and, of course, lower lows. Right? This market is so clearly in a strong downtrend. Sellers, in this case, we would call this total seller control, right? Sellers are just in control of this market. Everything the buyers try and put together gets stomped out by the sellers. Now, this changes in markets. There are times when the sellers are in control. There are times when the buyers take control. But how can we spot the earliest signs that that is changing? Because look, if you were able to capture the shift in momentum here, look at the opportunity of this reversal here. When things started to really get going, look at how much of a move you could have caught on the other side. Now, of course, I understand that is hindsight and we know what happens, but we're going to talk about some ways that you could arguably look to try and capture moves like this or be prepared for moves like this should things change around. Now, this is something, again, that's always occurring in the markets. This is not something that's 1 hour specific or daily chart specific. This happens everywhere. So let's look at this. Let's draw our first trend line. We'll draw it right here. Okay, and this is sort of the basis of what we're looking at. We are looking at a strategy where we're sort of analyzing the trend here. And our number one goal as a trend line breakout strategy player is to do something a little bit weird. We are looking for this trend right here to fall apart. We're looking for it to fail. So all of the sellers here, all the selling here, we're not looking for that. In this strategy, we're not looking to buy in here and we're not looking to sell. Right now, during this period of time, we are actually just watching. And more specifically than just watching, we are actually even just waiting, okay? So we are not jumping into this trade. Now, obviously, if you're a trend trader like me, there are probably some great opportunities to be shorting this thing in the meantime, but this is a cool way where you can sort of anticipate changes in direction, even though you might catch, downtrend moves. So I'd be loving to sell this thing as it goes down, but then this signal right here is basically what it's all about. For trend line break approaches, sometimes we get some of the cleanest breakouts with this basic concept. Let's say you've got the trend line identified. You've got the lower lows and lower highs. Then right here, what do we notice is different? Well, this trend line, again, you could have drawn it as early as right back here. It would have held. But right here, this is a little bit different, right? Things have changed clearly, because now at the very same level where sellers were in control, now we see a shift in who sort of controls this trend line. Now we see buyers stepping up and pushing through this level decisively. So the signal here is basically we identify a strong downtrend or uptrend, and then we look for the break. It is really that simple, but now we need to know how to play it from here. Okay, so how do we play this? How do we capture this move now that we're starting to see the break? Well, again, the first thing we need to identify is be watching and waiting. We spot the break. Now, what constitutes a break? Well, it kind of is dependent on how you look at it, but for me, I would probably look at it as structure. So anytime we get a close above sort of like the previous swing high or something like this, I would go ahead and say, okay, that looks good. That looks like a potential breakout here on this candle, right? We got the close there. Okay, that might be the entry signal. You might say, well, Nick, doesn't that seem like you're buying high? Well, yes, but you've got to remember, if we're starting a new trend, what seems to be high could actually be quite low if this trend really gets going, right? Again, we're looking for a signal after this trend has sort of arguably looked like it's finishing up, right? We are looking for the finish. Like, we don't know if this is going to be the finish exactly, but we could basically say, hey, well, we have some confirmation that we're seeing, some bid up on this price. We're seeing the breakout here, the close above, and bam, maybe that's our signal there to go long. Okay, well, then where do we go from there? That's the next question. We have, this idea of a breakout, a sign of change in direction. Again, the reason that this is so powerful is because you have all these sellers who have been selling. They've got to cover their stops should price start to rally. And that is where we get the big run up a lot of the times. You get a shift and you get the follow through as all the sellers have to cover, and fresh buy pressure says, hey, I think we've got a discount here. Things are discounted. So let's go ahead and bid this thing up, and we run. Okay. That's the concept. That's the idea behind the trade. So let's say that our entry is just a break, a significant break, as simple as it is, right around there. Now, arguably, you could be a little bit more patient than this and look for retests of this. That's another very, very common approach. But for the simplicity of this example, I'll just say, we bought the break after we bought the close after the break. And then where does the stop go? Well, for me, one of the simplest ways is I usually use structure with my stops. So in this case, it's a little bit bigger of a stop. This is 145 pips roughly on this move here, which I understand is a little bit larger. But, the cool thing here is that if you catch a proper break, the runs can be really impressive. The run up could be significant, right? So in this case, even if you had put up a 4-to-1, a 4-to-1, even with that large of a stop loss, was still possible. Now, it did take some time. It was not like an all of a sudden, big gain or anything like that, but it is conceptually what we're looking for. We're looking for the break and a new trend to sort of arise out of this. Now, you could have been a little bit more tight with this. For example, let's say that you see that level as sort of the broken level and you don't want it to go much lower than that. You could have, do something like this, right? Probably not how I would play it, honestly, just because, again, if this thing were to retest, I'd want to be, comfortably away from it. So something like this is a little bit more reasonable. You've got, 95 pips risk. And you can see in this case, this would have been incredible if you had held on to this trade. For me, one of the best methods here is to trail stops. That's how I would play this personally. So if I see the breakout, if I see a clean break on the daily or a 4-hour chart and it looks really solid, maybe I take the risk and I say, okay, you know what? I want to risk 95 to 100 pips here on this move, put my stop underneath this structure, this level, this previous high, and I don't want to see price go under there. So if we jump into this trade right here, something like this, looking for that continuation. If it doesn't continue, I want to hop out pretty quickly. That's the other thing I need to mention, is that when we're trying to do this, sometimes it looks like it's going to reverse. Sometimes it does a little breakout and then it just goes like this, right? And that sort of is not what we're looking for. We are looking for the clean break. And if it doesn't give it to us, then this strategy, the way I'd play it is I'm out of there very quickly, right? So that's the concept. That's the theory here, is we're looking for a big trend to the downside to start signs of weakness and looking to try and jump in there to join the new strong trend. So let's look at another example. This one is actually one that I'm not in right now, but I took some trades on this concept here. So let's see if we can talk about this. All right, so check this out. Here is a bit of an example on the Euro USD. So if you guys were watching my streams and my channel during this time or during this time, I was pretty bullish on the euro dollar. The US economy was sort of lagging with their slow vaccine rollouts, and I pretty much had a bearish thesis on the US dollar as the stimulus was being printed like crazy. And I thought basically the euro was probably a better buy during this time. Well, I caught some moves there, but basically the idea is I was watching for this to fail, especially when we had a change in presidents and things became a bit more stable in the US. The vaccine rollout became a little bit more confident, and the US economy started to really pick up. Well, during that time, I basically fundamentally started liking the US dollar and liking and disliking the euro. But on top of that, I was waiting for signs because we're still in a technically strong uptrend. Once we got the break, though, everything started to come together. We had some great moves here. We had some great breaks and retests, stuff like this, and the overall trend to the downside sort of coming into play. This is basically a long-term trend line breakout, right? You've got this move to the up, and then bam, you broke through that, and then there's some retests here. So what I mentioned earlier is like the retest concept, right? You have a trend line that you've identified as a strong level, and then you basically say, okay, there's the break underneath. You wait for some sort of retracement, and again, in this case, let's say that you were short on the retest, right? And you put a stop somewhere above structure. Yes, there was a little bit of heat on the trade here. It didn't go perfectly well, but the idea is the same, right? There was some good moves there. In that case, that was up to almost a 3-to-1 should you have taken the trade right there. So again, I understand it's not perfect, but this is just a real example that I've sort of been watching on the euro dollar recently as we started shifting directions. I didn't take this trade exactly, but I definitely took some euro trades during this time as I liked the Aussie a lot at this time. I liked the New Zealand a lot, so I took some trades on those pairs. Just from a fundamental perspective, but from a purely example perspective, technical view, you can see we had the uptrend, the break, and the shift in momentum there is sometimes all it takes for this thing to really move back the other way, right? It's not a perfect strategy. It's not like a perfect entry style or anything like that. Nothing really is, but the idea is, if you have a strong trend in mind that you're watching, and then you get the shift, you get something that really changes in the mix, and you start to see a break in that structure. That break in structure can lead to some great moves, some counter moves back the other way. And so here on the euro dollar, I think we're even starting into more of a downtrend here. Personally, that's just my opinion. I've been selling this thing. You can see I sold it here, got stopped out. Sold it, I bought it here. I think that was a break-even trade, but that was, before this trend line sort of failed. I was still looking for buys, ended up changing directions here, and sort of have been bearish since. But just the idea there, again, is looking for that big shift in momentum, enough so that we can start seeing these break down, right? Because a strong trend theoretically won't let this happen, right? If a trend is very, very strong in the short term and in the long term, usually you'll see these things just snap back and continue rallying, right? But when you get the fade, when you get the opposite reaction where you see, price is not able to hold those trend lines anymore, that can sometimes be a great, great signal. So I hope this has been helpful to you guys. Again, there are different ways to play it, different ways to trail stops if you prefer that, or put stops in different ways. Some people prefer this on the hourly chart. Like I said, it's not a time frame specific strategy, but it's a price action concept that I think is very, very powerful and can create some excellent moves in the market. So thank you guys for watching and for tuning in. If you did enjoy, make sure to like and subscribe down below here on my channel for more free trading content. I share all sorts of tips, tricks, and my experience in the market, both good and bad. So stay tuned for more videos, and we'll see you back next time. Hey guys, thanks so much for watching this video. If you enjoyed it, please remember to like the video down below, because if you don't, you're statistically 84.72% more likely to blow an account in the next 48 hours. Don't ask me how, don't ask me why, that's just facts. If you enjoyed that video and you want to see more free content here on YouTube, I'll be popping up some videos on the screen now. Go ahead and click anything that looks interesting.